Hello, everybody. Technically, today is a follow-through day in the overall market. Yesterday, I said it might be because these these intraday sessions following the gap downs and reversals or what have you, and the lows retest that we saw in January, February, have all been pretty muddled. But if we just use how it's classified in IBD, this is up day one, this is up day two. Now you're on the lookout for a follow-through day. New York Stock Exchange technically didn't follow through because volume was lower than the session before, but V-shaped rallies, lower volume rallies, and everything else is par for the course, so I'm not quite sure what to make of it. I have higher volume on Investors Business Daily when it comes to New York Stock Exchange, but that's besides the point. The real point is that the NASDAQ, basically, if we count, this is day one maybe, this was day two, day three, day four was the follow-through day, and if you want to call this the real follow-through day, go ahead. But once again, you like those V-shaped moves? They've been the norm since 2009. They don't seem to be going away anytime soon. And once again, do you notice the big, tall red bars on the way down and the light volume on the way up? We've seen that before over and over and over again, and you know how that ends, so I'm not quite sure why we're all too giddy right here. In saying that, if we pull back on lower volume, or even higher volume anymore, who cares? It's all convoluted and mixed up and insane and doesn't make sense anymore. But if we do pull back on lighter or heavier volume, consolidate somewhat sideways, and then can take out these recent highs in February, sure, I'm in. I'll go with it. But for right now, follow through day, sure. But is it anything great? No. We still have the resistance at the February highs, the 50-day moving average, 200-day moving average, the December, November lows, and even kind of right here at the October highs. If we go straight across now, that's kind of where we are at right now. So we'll see if we can hold the October lows, So we can see if we can hold above that support level right here now that the NASDAQ has gotten through it. But overall, I'm going to keep my cash heavy, let's say that. I'm not going to really buy this. S&P 500, third day up day. Not a fall through day, but it doesn't matter. NASDAQ's the true fall through day, but might as well call this one too. We're at the February highs. We're near the 50 and 200-day moving average. So a lot of resistance left. Once again, not sure why everyone's so excited, but whatever. I'll take it. So for now, we wait and see. The Dow Jones Transportation Average is up 1.62%. It followed through of its 50-day moving average retake. Once again, though, do you see huge volume on the upswing in this index compared to the sell-off? No. So things still don't look right. And then the Russell 2000 lagged today, only up 1.54%. It's still below the February highs, 50-day moving average, 200-day moving average, the December, November, and October lows, and even the August lows. So plenty of resistance areas for the Russell 2000 to have to fight through in the short term. We're going to need to see a little bit more backing and filling before I can get confident. Now, in saying that, our perfect speculator scans are extending, or increasing, I should say. Two Cancelim quality stocks that you've seen me talk a lot about on the new positions page and in the videos is Cray and XRS. I'm a big fan of both stocks. Well, Cray and XRS are both now perfect speculator scan quality stocks. XRS is showing up, I believe, in the pre-perfect speculator scan that looks for stocks that are not quite up 100% yet. And Cray is up at least 100%, but it isn't quite $50 yet, so it gets in there also. XRS also is not a $50 stock right now, so that's why I can't make the main one too. But XRS looks good and everything, but we need to kind of look at an arithmetic chart here. So let me pull this up to arithmetic and then widen it out a little bit. And if we just look at what it looks like, from the way most people look at chart patterns, you can see that XRS, traded a certain kind of way in 2011, 2013, 12, and 13 compared to now. And as you can see, it's gotten extremely volatile in 2015, and now the V-shaped moves are just downright stupid in 2016. So when XRS was here, I was good for it building a handle and then buying the handle. But a handle turned into a straight V-shaped sell-off, which turned into a V-shaped rally, and now we're following through on a breakout to new highs on heavier volume. This one is not buyable until it builds a handle. The same way with Cray. Cray went from being a stock that right around here I was like, oh shit, if it can build a handle, I'm going to really, really like this. But instead, it V-ramped down below its 50-day moving average, looking like it was utter an utter disaster, I guess you could say, and that there was no way it was going to come back anytime soon. Oh, speaking of the devil, it comes back in one day. That was yesterday. So up 20% in one day. I hope you like V-shaped moves because this is what this market has. And as you can see, the way that this thing traded throughout 2010, 11, 12, and into 13 and how it trades now, we're not looking at the same kind of monster. So there's no way I'll be interested in Cray unless it can move sideways and build a handle. Also, USCR has entered the perfect speculator scan again. We were long the stock once back here. It's now re-entering the scan. It's, of course, going to need to work on its right side more than build a handle. And once again, if we compare how it's trading now to how it used to trade, we're looking at an insane, psychotic acting market. So good luck trying to game these stocks on an end-of-day trend following basis. It's still very hard. But that being said, I'm a fan of USCR. Hopefully it can build out, and give me a nice pattern to buy. So USCR, it's working on a cut pattern. Cray, it's already broken out now. Fine. Build me a handle. Pull back to the 50-day moving average on moving average on below average volume. I'll take that. XRS, build out a handle here at least 5 days and or pull back to the 50-day moving average on lower volume. I'll take it. And then also BMA is still in the scan. That's a wedging breakout. Volume is all wrong in the base with heavier volume. Even though on a weekly it does appear to be support now. You can see how tight it's traded. But once again, it's breaking out not in an ascending base pattern, but in a wedging pattern, and volume isn't big enough. So once again, BMA, for me to even be interested, perfect speculator quality stock, I'm going to have to see it pull back to the 50-day moving average or build a handle. And then also ELLI, perfect speculator scan stock, does not qualify for any of them now, but it is can slim. It will be perfect speculator scan again. You can see its weekly base. What a crazy, crazy, crazy moving stock. Once again, just to let you see it on an arithmetic chart going back out to how it used to trade. It's so funny to me, man. It's hilarious. 2012, 13, a little rough. 14, but the uptrend of 15 looks good. Now look at it. Psychotic. So another cut pattern. Maybe it can build out. Maybe it won't. I don't know. But I know that I'm ready to buy new long positions as they set up. We're just not quite there yet. So tonight, there's no new long positions, no new ads, no cover, or no sells, no short sells, I should say. No ads to the shorts. There's no partial sells, but SDOW is closing below the January and February lows. I'm not going to give it to the 250-day moving average because I just had some pretty solid gains. We already locked in half the gains back here. Had more solid gains again, but it's not holding the support levels, so I was knocked out of all of it today, 100% of my position. I refuse to let these gains turn into a loss, which they probably will, because V-shaped moves that go on longer than you can say solvent or profitable continue to happen in this market. And then also Netflix is a 50% cover, closing above its 20-day moving average. I don't care if it has lighter or heavier volume. Overall, it looks like it's trying to find a floor. It's just so hard to game this stock market on an end-of-day trend following basis. I just wouldn't take anything too seriously. So I'm going to lock in some gains on Netflix, 50%. 100% obviously will be taken out if it takes out the 50 and 200-day moving average. But for now, there's nothing doing. The best potential new long position was BAK. I like how it's setting up in this consolidation pattern. The base was longer. I would consider it ahead of earnings. But earnings are either tomorrow morning, according to one data source I have, and or before Friday's opening bell. So I'm not sure if it's Thursday or Friday now, but bottom line, not enough time for a pattern that looks like this. Moving on. And then in the commodities area, natural gas definitely looks like it's bottoming, but considering the downtrend it's been in, I just don't want to even take a position here. I would go, if you were going to play Gas L, I would look at the options change. I would look at buying calls that are in the money with some time left, not the ones that expire on February, but I'd be looking at the March call options. But either way, this market has work to do. It's a good start. We got some leaders out there showing up, but not enough. There's still too many sloppy patterns.